I think the disappointment really lies in the engagement. The numbers that came out last night from the competition in Alphabet made people assume that they would have similar engagement numbers and the protection of high ad rates throughout the platforms. So it's really going to take a little bit of digging in. It's still a very profitable business and still a lot of user engagement. A 1.93 billion versus 1.95 billion is not an indication to us that somehow the power of those brands has changed a whole lot.
Not many things to like here. A lot of negative surprises, in my opinion. We knew that the bar was high heading into earnings. We also knew that they're lapping tougher comps and Apple iOS issues, but the guidance here in Q1, single digits revenue growth, is much lower than anybody anticipated. I think the combination of lower monetization, lower engagement is kind of putting an air pocket in front of Facebook now. We continue to like all the call options that they have. I think they have a lot of under-monetized, unmonetized surface areas, but that remains to be seen. Right now, they just need to go through this tunnel of Apple iOS headwinds, of under-monetized surface areas, and then come out of this tougher comp era. So probably this remains under pressure for the next, call it 3 to 6 months.
Obviously, that 3 to 11% growth, that was the spookiest thing about it. I try to think back, there was a time in 2018 where they missed on revenue, they missed on growth, I think, and the stock went down about 20% then as well. At the time, it was also sort of under a cloud of Cambridge Analytica and whatever the, PR du jour thing was then. So to me, it seems like it's kind of overdone, but I want to hear what's on the call. The thing that I actually didn't expect that they talked about enormous CapEx numbers for next year, but they weren't very different at all from prior CapEx numbers. I thought they would kind of scare the street with very, very big CapEx numbers. That did happen in the fourth quarter, but they didn't cite that for this current year that we're in. So that was actually a little bit surprising to me. I mean, all that having been said, though, I think this reaction is quite extraordinary. But let's hear more color from them. I'm neither a buyer nor a seller.
It sounds to me like they're distracted. And what happens when you're distracted is you spend a ton of money and you wind up taking your focus off the ball. We're not worried about congressional regulation anymore. We're worried about eyeballs. Worried about spend. And we're also worried about the fact that you said this is rare when it happens. We're seeing this more and more with the after hours swings. Netflix, Google to the upside, Netflix to the downside. We're seeing these mega cap tech names trade like they're $5 stocks. This is tremendous. It doesn't do anything for confidence, for investor confidence. So everything that we gained in the last day or so is probably out the window. I'm more concerned what it means for the overall macro market than what it means for large cap tech.